Louis, great to see you and thank you for joining the podcast. How are you?
Good to see you, Jake. It's a pleasure to be here. That's great you started a podcast.
Yeah, thank you so much. I've seen you describe yourself in the past as a value investor. For people out there that don't know what that means, what does that mean to you?
So, value investing is the investing philosophy that I studied, back in school, back when I was young. I picked up the book. It's called Security Analysis by Benjamin Graham. It was the enlightening book recommended by the value investing legend Warren Buffett. So basically, what value investing is, you buy a stock or the asset that is below its true value, right? That's just the fundamental of value investing. I think that's applied to all kinds of assets, right? It applies to particularly stocks. So when you do stock analysis, you figure out the cash flow, you figure out the balance sheet, you figure out the income statement, the growth of the company, and you discount it, right? There's a very famous valuation model called discount cash flow. Basically, predict the cash flow in the next 5 years, and you discount it back, and you get the intrinsic value. And if the intrinsic value is above the stock price, and then the company is traded at undervalue. So that's basically what value investing is. But the more philosophical way to describe it is more like, when you see there's a building or there's like an asset out there that's trading way below its intrinsic value, I call it value investing. But people, in the traditional value investing world where I studied during the college, is very, very strict, where anything beyond the model, they don't call it value investing. So you have all kinds of model that you have to apply, like the discount model. If you cannot discount it, then it's not even valuable. So a lot of like tech stock in the past, like Google, Amazon, or the Magnificent Seven, right? You cannot use the traditional value investing model to value those companies. And many so-called value investors have missed the Magnificent Seven. And I really appreciate there's a value investor called Bill Miller. Bill Miller was not applying the traditional value investing method. It's more looking into the future and say that, Amazon can grow at this kind of revenue growth, and it's going to dominate e-commerce, right? And what's that valuation look like? And but many value investors traditionally, they can figure that out. So most of the part of the job of value investor is really just figure out the future and discount it back in the present and see if the present value is undervalued, right? And I think that's basically what value investing is.
Awesome. I've got some notes here with a ton of different angles and questions for that. But the number one thing I come across when I make friends who are value investors is the value investment model in an inflationary environment. Have you found many value opportunities, and where does it take you if you can't find them?
So in stock, right? In stock market, value is basically is subjective, right? And you can define value in the traditional way where I just described using those traditional models. And there are also a set of value company that you cannot really calculate the value based on traditional model, which is the tech stock. And with the tech stock is very unpredictable, because you need to understand the technology they are developing, and understanding that technology is going to transfer that value into revenue growth. That's really hard, right? And if you can't find any traditional value company in the stock market, I'm sure you can find that, right? But it's like you have to dive into income statement, cash flow statement, balance statement to figure out where's the value in that company. And that value doesn't mean the future growth. That value means, there's a missing piece in the asset on the balance sheet, which the majority of investors really haven't figured out the value of that. So that's one kind. And there's another kind where, the future of, the AI, what's that value to that company? For example, like Nvidia is trading at, I don't know, crazy multiples, right? But the market gives that valuation because the future growth of that company is huge. The revenue can go 1x, 2x in the next 1 year, 2 year. So with that multiple, it gives you that the future is bright, right? So the company can trade at a multiple. So there's different angle, and what I believe is there's a lot of opportunities in the tech stock, especially when you're looking at companies like maybe like MicroStrategy, right? When you look at MicroStrategy, the accounting model doesn't apply to the Bitcoin on balance sheet, right? So you have to dig in and figure
it's
out
so
the
different, right?
Yeah. Right, and apply that to the stock price and what's it worth. That's like subjective, right? Because you can say the Bitcoin could worth 1 million in the next 5-10 years, and what's the company value can be if they hold significant amount of Bitcoin. And if you are a traditional analyst, you won't even dive into that, right? You just look at the 10K, which they didn't disclose on the balance sheet that they own Bitcoin because the FASB accounting hasn't really alive yet. So the digital asset accounting isn't really applied to the traditional analyst, and that's where the market kind of like didn't get it right, didn't get the valuation of the company. So there's a tremendous upside for those who understand the true value of the company and the true value of the asset, and that's one thing, right? And I figured out the true value of the company is it's basically what value investor need to do most of the time, and you won't always want to buy undervalued asset rather than when it just have been appreciated, right? And I think it's great time, when you buy Amazon like 10 years ago, but now is it truly value at at the price, right? It's hard to say, right? Maybe there's more growth, but it certainly is much more undervalued when it's 10 years ago because nobody see it coming. And if you figure out that, and I think you can make a lot of returns based on the analysis.
Awesome. And Lewis, apologies for kind of throwing you in the deep end then to start the conversation off with a very, in some ways, basic explanation of your view of things. But I really enjoyed meeting you in person at the Indonesia Bitcoin conference now a year and a half ago. And it was kind of like we'd come at the situation from very similar directions, but from very different paths. And what I find interesting about value investing is that idea of like what is valuable. And you've already mentioned like value is subjective. And it wasn't until I started piecing together some of the Austrian economics around what is value that things started to make sense for me in like much more so. I'm intrigued as to how have you developed your lens as to how you look at an investment over time? Has it changed a lot in terms of what you're looking for? Have you got better as you've got older? And yeah, just talk me through a little how you might have evolved over time in terms of what you're looking for.
Right. I started out with very traditional way of value companies. I started out like looking at very cash stable companies. And one of my early investment is 7-Eleven in Taiwan.
Cool.
It's a cash cow business. When I figured out the true value of that, which people don't understand how the business work, and people don't discuss that this tremendous cash flow that the company generated. And if you bought that, I bought that, when it's like at the low point of the company because people expect it to grow even more because the company was expanding into China market, but they undervalued the Taiwanese market, which is they have a monopoly over here. And the stock was quite cheap because there's all kind of negative news. So I bought that. That was my first investment, and basically 2x that investment. And when I headed into college, and I studied a lot of the tech companies, for example like Tesla, for example Amazon, Apple, and basically because I'm young, right? I'm like always looking into what's new and what's the newest technology, how it that impact the lifestyle. And I think as an investor, you have to look into the future, right? You cannot just be stubborn in the past. You have to look into how technology evolve and how that impact the valuation of the company. That's when I started to listen to investors like Peter Thiel, those great tech investor. And Peter Thiel has this he written a book called Zero to One, which is very inspiring as how the disruptive technology go from zero and to one and become a dominant force in the business space. And I think that's really inspiring. So I started reading all kinds of different investment book and even venture capital type of investment thesis, private equity. So I kind of like absorb all of the information and learning through all kinds of like the investment cases, the thesis. And during my college time, I was interning at a private equity firm based in Taiwan, which is the largest private equity firm. Be able to look at what was the company that pre-IPO. How do you do valuation on that, and what's the angle that how investors make money? But not all the deals make money. But there's some very interesting negotiation and in person talking with the CEO before the IPO. So that's quite interesting. And also like venture capital, which is subset of that private equity, which is early stage investment. How do you value early stage investment? That's also interesting. Early stage investment is more based on trend, right? Is this the right trend you want to invest in? Which management team that you find most talented and have most advantage going into the business. So if you like compress all of that kind of like frame my own investment philosophy, which also is still centered around value investing, but it's just like when you're looking into all kinds of those stages, you constantly justify the valuation of a company because each round until it's go IPO, even after IPO, the valuation is always changing. The company, the business is always evolving. Some become very valuable over time. Some just stop, right? Maybe at a Series A, Series B. Even after IPO, many companies go bankrupt. And it's just constantly learning how you value company based on the current information, and then also the future information. I think that's a key. And I got into Bitcoin, right? And that just segue into my Bitcoin story. Because when you try to invest, you're basically absorbing all the information on the market. And I think during my college time, I was just looking around what's the most interesting technology that I can find. I find Bitcoin, right? It's fascinating to me because when you study finance, when you study investing, is always involved in money, right? Money is the most important aspect. It's the holy grail, because when you invest, you want to make money, right? And what if the money is changing? What if the definition of the money is changing?
It's so huge, isn't it? Like, hang on, what's changing here? The actual money is changing.
The actual money is changing, right? Because if you look into the history of the money, which I was studying it, it's fascinating, right? We start from maybe shell, right, which we society agree upon, which have value because shell is scarce because they only find in the ocean area, right, in the beach. And then over time, it migrates into different kinds of tradable goods like bees or whatever, jade, and ultimately gold kind of win the whole conversation of commodity money. And gold become widespread globally. Every civilization adopt gold standard. And after that, gold kind of like getting out of use because there's the centralization happening around gold, and also it's just very hard to transfer gold, right? So it become gold back money. They all kind of certificates. And when you study the history of Silk Road, right? Because Silk Road, you have to bring goods to different civilization. You have to trade with Middle East. You trade with Europeans. So the Chinese are actually very smart. They have a lot of gold and silver, but they cannot always carry that gold and silver to Middle East. It's too far away. In that route, you always have thieves, pirates to confiscate your gold, right? The bank was issuing paper gold so they can carry easily, and verify on the other side, which is a city in the Middle East, say this is a standard certificate that we accept here, and it slowly become the fiat money, right? Government try to get rid of gold because the global trade is happening. The trading become more frequent, so the paper gold cannot satisfy the trade demand. It become fiat, and the fiat is just a full faith backed by the governments. And now we have transferring into the Bitcoin age, the Bitcoin standard, which the money itself also has a definition change. It becomes digital, right? And when money becomes digital, you need some sort of like boundaries. And I think it's brilliant that Satoshi Nakamoto created Bitcoin in 2009 and released it, which I think is mark of the new era for money, right? Because I think that's a distinct separation between the state money and internet money. And that as an investment is very, very interesting because you kind of have to turn your ideas about finance, money, you have to flip that, right? You have to think about the first principle. The first principle is the money is changing from fiat to Bitcoin. And all your investment ideas, all your valuation model have to adjust toward that. So I think that idea is very radical, right? For many investors, especially people in traditional finance, they don't understand that the money that we have are transferred from analog wealth, right? Analog wealth like gold, real estate, fiat money, fiat instrument, fiat financial instrument into a Bitcoin world where in this Bitcoin world, we will have Bitcoin back instrument, Bitcoin back bond, debt, equity, all sorts of like different innovation. And I think that's just, completely disrupted the whole investment landscape. And yeah.
Well, I mean, Lewis, I totally agree with you that it's disrupting the investment landscape. And forgive me, I was lucky to meet your missus and your young family, and she joked that when you first met her, you started telling her about Bitcoin. I don't know if you can remember that story, but she was saying that you started talking about how amazing this thing Bitcoin was at like a drinks party at your college or something. It just hits you so hard. You're like, well, hang on. All this other stuff we're trying to do is kind of pointless if this thing's changing over here. And so you touched earlier on this idea of early stage equity investing, technology investing. Like Bitcoin completely plays into that, right? As like an early stage technology. And so my question is then, how do you explain this shift to people? I know you started a fund. Or perhaps you could explain slightly the structure of that, Mimesis Capital, and how that
Yeah.
works, and what you guys do every day. And forgive me, I think it's your father that you work with very closely for that. Like, how do you persuade him that this is a good idea?
So, I have been investing since I was 12 years old. So I gained that trust very early on. So I was managing, portion of my own money and my family money, and I was doing pretty good. And after college, I worked for a family office in New York. My main job was looking into crypto projects because my my intense study of Bitcoin during my college time. So I have the front row seat to look at all kinds of like crypto projects and um, financial services around crypto, mining companies, also like funds. So that gave me a lot of like insight into the industry, and I able to talk to kind of smart people, intelligent people, and do my own analysis around that information. It was quite that was early time. I'm very glad I have that experience. And after that, I worked for a crypto hedge fund very shortly, like half a year, but I'm able to see how the hedge fund pump and dump crypto projects at the front row seat. So I saw all that. And because my experience, I have been investing in Bitcoin very early on. When the COVID hit, I was like, this might be the biggest opportunity um, for me and for the entire family to go, you know, not like go all in, but is pretty much going all in on the Bitcoin standard. My idea is create a family fund, right? Family fund is backed by 21 million Bitcoin, and it's just how many Bitcoin that we can accumulate. So I've been looking into like a lot of history about how family, like Rockefeller or JP Morgan or friends and families as example that how they move wealth across generation. And my family business has been some sort of that like that because we're dealing art. Art is kind of considered a generational kind of asset wealth that you can transfer easily to your descendants, and is basically non-taxable, right? And the government will not know who you give to, and you can tax reduct using donation method. So there's a lot of like financial ways to avoid tax and pass on wealth to your descendants via art. And it's a lot similar to Bitcoin. Because of that background, there's mutual understanding that where this thing is going to lead to. So when I explained to my family, I was basically pitching that this is kind of like art and scarce, desirable, um, but there's many advantage that art didn't have, right? For example, there's no maintenance of Bitcoin, and it's digital, so you can transfer it very easily, right? And you can store it pretty easily, and you can verify pretty easily. And if you look into art, it's like the verify is very hard. Also, storing it is very hard, and to transfer it across different domain, which when you want to ship it to US or US ship it to Europe, you have to pay a lot of money, yeah, right? Especially if you have expensive art, you have to pay insurance coverage. And I think Bitcoin kind of matched that, the category of generational wealth, and a family can tap into and rely on it for generations to come. So the thesis is very simple. They just buy Bitcoin and form um like a real estate of trust that can pass on, right? And I think Bitcoin has sort of that unique property, where many asset doesn't have, not just art, but people store a lot of wealth in real estate, right? And real estate is kind of like very hard to pass it on. You have to pay tax, right? You have to go through all kinds of like government documents, legal documents. It's very controlled, right, by the state, by the governments. So it's not easy to transfer that kind of wealth to the next generation. It's a lot of inertia, right? If you look at stocks, same thing. Government has to know what stock you own, how many of them, so you can transfer that. Also, that's you cannot avoid a tax on that as well. So the traditional way of storing wealth is really pretty much being satirized and captured by the state, and there's no way around. You can avoid all kinds of government overseeing you, right? I think that's just terrible. And you really want to have some way, some portion of wealth that cannot be overseen by the government, and very easy to maintain, very easy to transfer, so that your wealth is protected, right? There will be some portion of wealth that the government gonna take some tax on it. They're gonna penalize you, that they're gonna charge you with property tax, whatever, right? So the world is pretty much balanced. You cannot have all your wealth in real estate, all your wealth in art, but I do believe that you can have all your wealth in Bitcoin, and it's just a better way of storing your wealth.
Some people would say you're mad, Louis.
Well, I think we are really entering into this wealth transformation because the traditional way of storing wealth is outdated, and I call it analog wealth, which is the real estate, the art, the stock market, the bond market. That's not the new wave of wealth. The new wealth is Bitcoin, and we kind of like enter into that period where the wealth is slowly migrated into digital wealth, and I think that's the biggest trend in the next maybe 20-50 years. And whoever captured that, is going to have tremendous upside. And it's kind of like when you enter into internet age, everything around you become more connected, become more digital. And same thing with wealth. The even more crazy thing is sell all your analog wealth and convert that into digital wealth, which is Bitcoin. And many could not accept that because they have real estate that going to be passed on. There's art going to be passed on. They're not going to sell that stuff, right? But the most rational thing I believe is sell all that stuff and convert that into Bitcoin, because the world we are heading into is going to be more connected digitally, right? And a lot of the wealth that you store in the analog world is going to depreciate against Bitcoin, right? If you pull up the chart, of every single asset class against Bitcoin is kind of like falling, right? And I think that's not coincidence. It's a nature, because when you have something that's finite and you have something that's infinite, of course, the energy of that infinite thing is going to flow slowly into the finite thing, right? I think there's a great analogy described by Michael Saylor, which, the waterfall, the gravity. The waterfall means like the money flow, right? And you have a lower energy state where is the Bitcoin, and you have high energy state where is the analog wealth. So what we are seeing right now, why Bitcoin is crazy expensive, is that the money flow is flowing from the analog wealth into digital wealth. And it's going to stay there for quite some time in the digital world, right? Because Bitcoin is kind of like forever, but your real estate is not, right? Your real estate is going to depreciate, going to disappear over time. Give it 100 years, give it 200 years, you have renovated, you have to basically protect it, basically maintain it. But in Bitcoin world, it's like you don't have to do that. And which one is superior? So it's a very radical idea, I think, but it's rational, right? It's rational for investor to have already think that the money that we have today is outdated, and we need to go into this Bitcoin world where the new frontier is at, and that's good that we are kind of like experiencing and actually like looking at it and how it plays out. And for many wealthy families, individuals, they cannot grasp the idea of the digital transformation of wealth. And it's not because they don't get how wealth is created. It's that they are scared. Most people are scared. They're scared that what if Bitcoin is a scam? What if it's a Ponzi scheme? What if it's a bubble? And the wealth they store in Bitcoin going to be destroyed. But actually, is another way around. Is that the wealth that you store in the traditional asset is going to destroy slowly against Bitcoin. And I don't blame them. They don't understand the concept because, so that's why you have the opportunity to truly value the Bitcoin network, the asset, right? Before everyone else. If everyone else understand the true value of Bitcoin, you don't have the opportunity to buy it at, 1,000, 10,000, 100,000, right? They're gonna buy it much higher. And Bitcoin is just will go much higher because very few, the real wealth haven't really grasped it. Like they should sell the wealth they store in all kinds of traditional assets into Bitcoin. They don't understand that. So slowly by slowly, the energy is going to flow into Bitcoin, and Bitcoin's energy is going to grow exponentially over time. And that's what we saw in the past 15 years. You have the hash power, the amount of capital flow into Bitcoin is increasing over time. And that doesn't really stop. It just keep it coming cycle over cycle. And that just by design of the nature of how capital flow. So I think understand that's very, very important. What's the valuation of Bitcoin is truly subjective because some people believe it's zero, right? Some people believe it's 10 million. And I think the interesting opportunity is that because there's a bipolar aspect of that, because there are very, very intelligent people think Bitcoin is going to zero, right? And there are people also very intelligent think Bitcoin is going to 10 million, 100 million, and basically going up forever. And I think as investors, you need to bet on the probability, right? What's the probability of Bitcoin going to zero? I think it's very, very low. And the probability of Bitcoin going to 10 million is probably very high. So I think I wanted to stand on the more optimist side, not be a doomer thinking that Bitcoin is a scam, a Ponzi. And I think after all the years of studying it, reading all the books, the history of money, and you realize Bitcoin is real, and it's going to transform the entire world. We are living on Bitcoin standard, but most people, 99% of people, are still living on fiat standard.
It's wild, isn't it? It's absolutely
right?
wild.
And then they're still talking about how much they invest in real estate, how much they invest in this art. They still brag about it, but that's their thing, right? That's the thing of my father. That's the thing of a lot of like boomer, right? They think real estate is a true store of wealth. They think oil is true store of wealth. They think art is true store of wealth. But my generation, I think, is you have to understand Bitcoin because if you don't understand, you're gonna miss this digital transformation of wealth.
It's absolutely epic. In some ways, Louis, I mentioned touching this already, come to this problem of essentially store of value from generation to generation, from, having you grown up in Taiwan, I grew up in the UK, like different parts of the world completely, but same problem and solving it in different ways. You mentioned you started investing when you were 12. The kind of lessons that I believe my family were coaching me from a very young age are why I'm so into Bitcoin as an advocate. Because it's like, I think it all lines up to say, actually, this is what the family business should be, not what was happening before. What if it was the case that in my case, a beer and pub company in the UK, that was my father's side of the business, that has driven a lot of value for over 200 years. What if that is obsolete as a form of intergenerational wealth transfer? What if you don't need to operate a company any longer? What if you don't need to have a real estate portfolio? And what you've just brilliantly laid out is all the reasons why I also completely agree. I think Bitcoin is better. And your phrase, it's radical but rational, that really hammers home. Like, it is absolutely rational. But that's when, as investors, we can get excited because we basically think that 99% of the world is irrational. And that's where the returns can come from. So what I'm interested to learn a little more about is, like, how did your family get into art, and why does someone buy a piece of art?
So 30 years ago, my father always told me this story, like how he started. So 30 years ago, art wasn't really an investment. It's an investment in the Western world, that's for sure, right? With the Western world since the Renaissance, the Rothschild has developed a great art collection. They use it as a store of wealth. When there's a war happening, the best way to carry your wealth away is to cut those painting out and scroll it and carry it away. Because that alone worth like maybe $10 million, but you have to carry wagons of gold, which is pretty heavy, and you probably get stolen on the way to another location. So it's interesting, right? Art has become a very unique way of transferring and storing wealth during the Renaissance age. So Western world has really developed that concept pretty early on. And the same thing with the Chinese, right? The Chinese have produced massive, beautiful art, like the some of the jade you see in the museum. So, and the emperors, as some dynasty, they always appreciate art and artists, and they also store wealth in the art, right? If you look at all the dynasty emperor, even in the Europe, in the UK with the British Empire, a lot of wealth is stored in the art, right? Because it's scarce, is desirable, is beautiful, is easy to carry, easy to store.
Lewis, just to jump in for a second, I did a business trip to Taipei once, and I actually visited the museum. And in there was some Oriental pottery that was, like, I think 2,500 years old or something. Extraordinary piece of craftsmanship that was still in its, like, full piece. Yeah, just to, I guess, an experience I had to really resonate with what you're saying.
Yeah, if you kind of like value the Taiwan Museum Palace, I believe is what they call in English, um, you can value it at tens of billions of dollars, even hundreds of billions of dollars, because a lot of those art are pretty much priceless, right? There's only one in the world, so how much value is that? So all the fiat that we are printing in the real course is always chasing the scarce thing, right? So back to 30 years ago, China is really declining economy, right? Is very, very poor during that time when the civil war just ended, the communists took over, and there's all sorts of disaster economy plan, including the Great Leap Forward, the Cultural Revolution, so that destroyed the entire Chinese economy. And there's a lot of like art being sold cheap, very, very cheap during that time. And also like a lot of Western civilization came to China to steal and to buy those art very cheap. If you look into history, that when the First World War, I believe there's 8 European nation like Spain, England. So there's all kinds of like foreign civilization conquering China, right? And during the Qing Dynasty, and that's how Qing Dynasty eventually fall apart, because they are too old and too stubborn. And then it triggers the entire new reform, the civil war between the communists and the nationalists, and also this Japanese, right? Also like try to conquer entire China. So that's a wild time. That's a very dark time in Chinese history. Um, And because of that history, a lot of art is scattered around. Before that, it was very centralized in the palace in Beijing, right? Because all the war is happening, the the emperor had to sold art to fund the war, to fund the entire dynasty. But that's pretty hard, and people stealing and people trading those goods. So that's why you see, like, in the British Museum, there's a lot of Chinese art, which is bought and transferred during that time. And if you go to Japan, there's also a lot of Chinese art. So it's very interesting. And if you also go into U.S., New York museum, you can also see a lot of like Chinese art. So that was well timed, and that kind of destroyed the entire Chinese economy. And so bad, it births of a new industry, which is the art industry 30 years ago, when Sotheby's and Christie came to China, and I think they located in Hong Kong, started to become like a auction platform during that time. And because a lot of Westerners demanding Chinese art, right, like the antiques, so they saw the demand. And it's an interesting era, because all the art during that time is extremely cheap, because China just tried to recover from all the disaster in the past 50 years, even 100 years, right? I think you can buy something that the emperor has owned with his seal on it, like for like very cheap on the flea market, or you can buy it at auction house. So it's kind of like that kind of period information arbitrage. So for people that have certain information around this kind of art, how expensive it is, how scary it is, you can make a lot of money during that time, right? I'm not saying that 10x your money. I'm saying that 100x, 1000x, even. Wow. Even people acquire those very expensive antiques for basically no cost, because that era is chaotic, and you can just took it from someone, or accidentally find it at some abandoned house. That's a well era, and that's how my father started it, because he saw.
Sorry, so Louis, so dad would be leaving Taiwan to travel to mainland China to find artifacts that people would contact him with, and he'd go and see, is this real, or do I think it's real? What's the actual story? And would you take it onto your balance sheet as like an art trader type thing, or do you just say, I'll help you sell it and take a commission? How does it kind of work?
Yeah, it's kind of like, my dad is has this information like connect, right? During that time, there's no internet, so you need some sort of experts or dealers, right? And very interesting, like Taiwan during that time was very, very wealthy. Taiwanese are very, very wealthy, because we don't have any war, because we're just an island, right? We don't have war. War is happening in mainland China. So when the nationalists came to Taiwan, it kind of replaced the Japanese regime, right? Even though that nationalist control period is very chaotic and very brutal, but still, like, after they slowly opened up, we become the first economy that took advantage of the Americans started to exporting their manufacturing, and they picked 4 countries, right? First is Taiwan, and Korea, Singapore, and Hong Kong, right? And those are quite open Asia market. Mainland China hasn't opened yet. Mainland China still struggle with all the communist cultural revolution, and Mao just passed away, and there's new leadership, right? That's mainland China. It's still like a dark age. But Taiwan, Korea, Singapore, and Hong Kong are slowly open up, and we are kind of like accepting new age, where Americans need a new labor force, and so they located in those areas. So Taiwanese are actually benefiting during that era. Like we become one of the first manufacturing hub for all kinds of like manufactured products, traditional manufactured products, like maybe like clothes.
Yeah,
Uh,
trainers. I read the book from the Nike founder recently, or maybe last year sometime. But yeah, Taiwan was one of the places he had shoe factories.
yeah, also like oil refined products,
Hmm.
plastic products,
Wow.
all sorts of it, and we become very good at it. So we create lots of wealth. Uh, but at the same time, China's still in the dark age. So they opened up quite late. I think they opened up in 1990s, right? Very late, like 30 years ago they opened up. So that's why I say 30 years ago when China just opened up, that's like extraordinary era for wealth. Because you have if you are already very well educated and you went into China, you know a lot of information that the Chinese doesn't know. So the only business is all information arbitrage during that time. Few people understand, where the real stuff is, how to access it. But those people pay a lot of like efforts, right? They go into China mainline, establish business, establish connection, and is able to sell those art back to Taiwan. And Taiwan was very wealthy, so they can buy all sorts of expensive, rare antiques. And a lot of dealers actually make a lot of money during that time, like
Wow.
extraordinary money. And they also like, because they have this assets, they can buy it very cheap. For example, I can buy from you for $10. Now I know there's a seller in Taiwan and a buyer in Taiwan. I can say, this thing could worth $10,000. Do you want to buy it?
Wow.
It's from
Massive
Qi
margin, isn't
Dynasty,
it?
owned by emperor, right? Do you want
Wow.
to buy it for $10,000? And then the wealthy Taiwanese is going, yeah, I'm going to buy it because for them it's like still cheap.
Amazing,
But you
isn't it?
could you be able to access to those kind of antiques quite cheap, and people just abandon it.
It makes me
And
think, Lewis, of like verifying how hard that is. Like, is a piece of gold actually gold? Until you melt it, you don't know for sure. And I would imagine as an art trader, like what you're describing as your family business, you get your reputation is very important for like sourcing actually real stuff. And there must
yeah,
be so much fraud going on, selling fake stuff and crazy. I love learning all of that history, and thank you so much for sharing that. It's just so interesting what people do with their time and the opportunities that they see that appear for certain characters at certain times, and they actually seize the opportunity. They take it, and then the output of that is then the different decision making that has to be done to solve the next problem. What I want to finally touch on before I wrap it up is this idea that the value investors like this concept, it's the idea of the risk-free rate of return. And in the past, the risk-free rate was a US Treasury paying you interest, and you'll definitely get your money back at the end of that period. That now faces inflation risk and potentially even credit risk. Who knows? What if Bitcoin and the 60% CAGR that returns Bitcoin is the hurdle rate? Is your risk-free return? What does that mean? And are you now looking, like, for me, number one thing for anyone is like figure out Bitcoin. Figure it out. And if you haven't figured it out, spend more time figuring it out. And once you see it for what it is, it's gonna change your life. At some point, as investors, though, what's riskier than Bitcoin? What might make a better return than Bitcoin? And are you looking for Bitcoin proxies, perhaps, or equally like how to beat the hurdle rate that is Bitcoin?
right, yeah. And I think right now, like you say, right, most people don't realize money is changing, and they don't realize the new hurdle rate is actually earning the new money. You want to earn the new money. So whatever is you're taking a job, convert that fiat paycheck into Bitcoin, or you find an investment opportunity that can potentially outperform Bitcoin. I think that's just the mindset I think that most Bitcoiner have right now, right? How do you earn more Bitcoin? Um, I think we still live in a very early age era. And for me, is looking for a business opportunity, investment opportunity that potentially can outperform Bitcoin, and without too much risk, right? Because sometimes if you lend your Bitcoin to a custodian in the past was a disaster, right? For example, some Bitcoin yield products that
Yeah.
promise you,
Absolute horror show. Yeah.
right? Or you lend against your Bitcoin and you bought more with that borrowed money, you leverage it. That's also could end up in a disaster. So I think risk is the number one key thing to understand what kind of risk you're involved in. And I think, there are not many ways to outperform Bitcoin. I think the first very easy and low risk way to earn more Bitcoin is actually to take against some sort of leverage on other asset, not the Bitcoin asset, but other asset with low interest rate and long duration payout period, right? You don't have to pay it tomorrow. There's no liquidation event. So I think the ultimate way to borrow against is real estate. For example, you have real estate you don't want to sell and you want to buy more Bitcoin without selling your real estate. Take a loan. If the interest rate is very low and your duration is 30 years, I think that's intelligent leverage. Also, there's like talk about Bitcoin proxy, right? There are business out there that try to outperform Bitcoin. Can you participate into that? I think the number one Bitcoin proxy right now is MicroStrategy because they have figured out an intelligent way to leverage. They don't borrow against their Bitcoin, right? But they sell shares. They dilute their shares to buy more Bitcoin and issue debt. The debt is very cheap for the cost perspective. They issue preferred stock. So all kinds of intelligent leverage help them to outperform Bitcoin. And you can participate into that. So that's like a greatness of capital markets because there's all sorts of like tools and proxies that you can invest in. And I do believe there will be more and more those kind of opportunity emerged. But you have to be very smart and intelligent by looking at all those plays because some of them are not as lucrative as you think. Just for example, right? I think people 4 years ago, when people tried to earn more Bitcoin, they get into minings. Bitcoin mining was the pitch investor like this is a less risky way to make more Bitcoin. For example, like if you invest $1 million, well, you only got $1 million Bitcoin. But if you invest in $1 million in a mining company, the mined Bitcoin might be double or triple, right? That was the pitch. And because it's a low cost way for you to buy Bitcoin, right? But they didn't tell you is that the underlying management structure and the team, are they capable? Do they have integrity? Can they keep the business together? Can they run this for some time until pay back to investor? So on the surface, there are a lot of opportunities was very intriguing. But below, when you look deep into it, you figure out it's not that easy, right? Because when you go into mining, you have competition. You have competition over machine. You have competition over capital. You have competition over other miners. You have competition on the entire global Bitcoin network. Every single machine is a competitor, right? Even you are self mining at home, you end up compete with those giant mining farms. It's not easy to outperform Bitcoin, I think, and I think a lot of investors can be fooled. For example, like mining is one good example. When they pitch you, it's like you can buy. Why don't you invest in mining? You can buy Bitcoin at half a price, which is true. The mining cost minus the market price of Bitcoin, you can literally get 50% off when you do that. But it's not like one time you can buy that much Bitcoin. Mining is you have to go through a period of time. Let's just say you need to mine for over a year, over 2 years to get your principal back, and the additional was the discount that you get from investing in a mining project. Not many people make it in the mining space, and I think not many people investing in mining have made more Bitcoin, because of the entry area is not favorable right now. If you mine 10 years ago, 15 years ago, the cost that you have is quite low, so your upside is very high. But now it's like the cost is very high. The initial investment has to be like 10 million or 50 million to start with to be competitive, to make money. So and the potential upside of that is very, very diminished because Bitcoin has halving events. So what we have right now is a block like 3 point something Bitcoin, right? And after another 4 years, it's going to be way less. It's not good business in general. It's like operate at a scale to be competitive. Otherwise, you really don't have a chance to win. But 4 years ago, there's a lot of mining projects trying to go public, try to scale their business, but a lot of them end up bankrupt. And that's an interesting era. And if you invest in something like MicroStrategy, which the risk is pretty much controlled because all they do is invest in Bitcoin with with ATM selling, with debt, with preferred share, with their own cash. This is a much better way of buying more Bitcoin with cheap leverage. And it turns out like the fiat world compensate that. The fiat world basically offer you 0% interest. You can borrow $1 billion. Why not? Right. Also that when you sell shares, like the market absorbed it because market needs you to be the Bitcoin proxy. And so it's just a smart way to figure out how to make more Bitcoin. And there's another category, which is venture investing, which has high risk, high potential. You really comes down to like if you invest 100 companies, maybe like 1 or 2 become unicorns, right? But that just probability say it's not always the reality. And I think Bitcoin business, especially startups, the successful rate is very low. And that's applied to all kinds of venture investing. But if you look at Coinbase, for example, Coinbase, I think they have been public since 2020. The interesting thing with Coinbase is it never outperformed Bitcoin. So if you are only investing in Coinbase, what does it do? Is you better just buy Bitcoin. And it's funny, right? Coinbase is the largest exchange in US, maybe globally. And if you are a venture investor investing Coinbase Series A, and you get diluted all around before public, and after public you're able to sell your share and realize, shit, I would be better off just buy Bitcoin, so I don't have to deal with those dilutions. So venture investing is tricky. It's very, very tricky. I don't recommend everyone do it. I will just say you should just buy Bitcoin. And if you wanted to bet on venture investing, you don't want to bet all your life savings, right? Your life savings is Bitcoin. Maybe took like 1%, 2% investing in venture deal. But I would not recommend anyone do that because it's such a risky way to make more Bitcoin, because eventually you probably lost that 1, 2% and it become extraordinarily expensive maybe in the next 5 years, 10 years. It's always better off to buy Bitcoin. I think the next suggestion is buy a Bitcoin proxy that you think the management team is solid and they can able to leverage the capital market to buy more Bitcoin, because that's the least risky way to acquire more Bitcoin. Because when you come with operations, it's very risky to do operation in Bitcoin business. For example, if you run like exchange like Coinbase run a very, very well-run business, right? But why is that? it doesn't outperform Bitcoin because it doesn't buy enough Bitcoin. The stock doesn't trade according or relative to the Bitcoin performance, right? So that's why it doesn't outperform. Also, they involve in other cryptos, which other cryptos are still underperform Bitcoin. Also, we can look at miners. Miners, they are operationally heavy, right? And they sold most of their Bitcoin during the bear market, and very few of them have ability to maintain it and add more. So it's very tricky. And I think the least risky Bitcoin investment that you can make is actually looking at companies like MicroStrategy and other like operational heavy business in Bitcoin world is I would consider them risky and subject to competition because the industry itself is very competitive. Yeah, I if that's the answer to that, yeah.
Yeah, thank you, Louis. It's very interesting to hear how you think through it. And I completely agree with you that there are other ways of accumulating Bitcoin, such as a public market equity. I think Saylor's cost of debt is 0.85. And I recently looked at getting some debt and I got quoted 9.85. And it's like, okay, well, there's your arbitrage, right? I prefer to own your publicly traded stock that has a Bitcoin balance sheet and not do it myself. But if I had a real estate portfolio, maybe that would be a good way to try and get some extra Bitcoin is take on a bunch of 30-year long mortgages at, even 6 or 7%. You'd be like, sure, no problem. But yeah, again, I haven't done that. Well, Lewis, listen, thank you so much for sharing your time today. I think what resonates with me most is the idea of getting further out on the risk curve with the venture investing and just thinking through the question like, well, what if all this Bitcoin related equity is just really cheap right now? And if some of them hit big, then you should create a return. But I agree with you. It's very, very specialist, and the illiquidity is so long that Bitcoin could do a lot of stuff in 10 years time. So for your 100 angel investments or Series A type stuff, you've really got to hit a number of big winners to actually, outpace the potential that Bitcoin could have done in that time.
Right.
To flip that all around though, it's like Bitcoin's a Ferrari parked in the garage, but there's no roads yet. And so if you don't in some way try and help build the infrastructure that is in and around Bitcoin, which will be done by companies, then you'll never get to drive the car properly. And so there's that trade-off, isn't there, essentially? So yeah, 1% to 2% takes some more speculation. But generally, yeah, basically hodl if you can.
I have this interesting analysis that I recently talked to a venture investor that which grow faster, Bitcoin or venture business? Venture business in Bitcoin, right? Which one grow faster? So I have this Bitcoin is digital, right? The product itself is digital, right? So it can enter into every single cell phone, right? And software can adopt it like instantaneously. That's the huge network effect, huge advantage of what the Bitcoin itself does is it grow digitally exponentially faster than a business product. You have to consider that. For example, like when you do a podcast, how do you sell your podcast to millions of people? You have to go through maybe different channels, right? YouTube,
yes, apps, different platforms,
all kinds of social media. Yeah, but think about like if Bitcoin is the product, like does it really just rely on all the social media, or it's much more than that? Of course, it's much more than that, right? Because Bitcoin is already spreading on social media and now entering into local medias without even paying any efforts. So the penetration rate of Bitcoin, the product, is so extraordinary that no business product is going to surpass it. Because you cannot build a product that's better than Bitcoin. So the Bitcoin eventually is going to grow faster and faster, and your business is going to lag behind. So it's very interesting, right? For example, if you are in a hardware business and you sell the hardware wallets, how fast do you think you're going to penetrate 1 billion people?
You wouldn't keep up.
You want to keep up with Bitcoin because Bitcoin for the next 5 years might be penetrate 20 billion or 2 billion of people.
I read a Bitcoin article somewhere. Here we go. Daniel Kravitz in 2014. It's called The Correct Strategy of Bitcoin Entrepreneurship. I read it ages ago. I can share it with you after. I think it's fair to say that now, even 10 years on since this was written, he basically argues in the article that Bitcoin is so bloody good at store of value that the risk reward is just never going to be any better anywhere else. And therefore, anything that you don't buy Bitcoin with should be seen as some kind of altruistic, almost philanthropic project where you're like, do you know what? I'm making value with Bitcoin. That's okay. Now I can put some of this capital to work elsewhere. I don't expect it to ever create a return, and that's okay. And I mean, it throws the idea of venture capital completely on its head, right? It's like, why would you do that?
It's so hard to create a product that can outpace the growth of Bitcoin, because Bitcoin is natively more accessible, more digital, more adaptable. It's portable, right? So it's a very interesting analysis, and it's true. Like most Bitcoin product, maybe all the Bitcoin products out there, if you are selling as exchange or building hardware, you're never going to outgrow Bitcoin. It's just a sad reality. And another thing is, I think the Michael Saylor has figured out is, I cannot build a product that outperforms Bitcoin, but I can take all my cash, convert to Bitcoin, and become a Bitcoin derivative, so that you can keep up with the growth of Bitcoin. And that's the only way you can keep up the growth of Bitcoin. For venture business, I think most venture entrepreneur, they haven't really grasped is, whatever you do in your business, you can temporarily outperform Bitcoin, temporarily. But as things get more longer, there's also some risk in the business operation. But that's not in the Bitcoin. And your business is going to stall at some point, but Bitcoin is going to continue to grow. And meanwhile, you don't have any Bitcoin on balance sheet. So all the thing that you can keep up with Bitcoin is constantly accelerate your business growth. But that's not going to end pretty well.
Wow.
And the best way
such a big change, isn't it?
Yeah. The best way to keep up Bitcoin is buying Bitcoin.
I know. And I'm not going to say who told me this, but a friend of mine running a VC fund recently said to me, well, someone's got to try and outpace Bitcoin. But when you frame it like we're having this conversation now, it's like that's literally just talking your own book, because you want people to put money into your fund to try and beat it. But how? Louis, we could talk for hours more, I'm sure. I really, really appreciate your time. Thank you so much for joining me today. Last question is just really, if people want to reach out and get in touch, what's the best way to do that?
Yeah, X handle Louis H. Liu. You can find me there.
Cool. And I'll pop that in the show notes as well. Louis, thank you so much for your time today. Really appreciate it.
Appreciate it. Thank you, Jake.